George, thank you very much for joining us today. Eldorado Gold has 4 producing gold mines, and the growth profile from these mines, along with your development project Skouries, is very strong over the next 5 years. Can you just talk about the growth at your existing mines as well as your development project Skouries?
Yeah, thanks, Jimmy. It's good to be with you again. We're at a really exciting time at Eldorado. We're a pretty unique story in that we've got significant growth over the next 5 years. Our 5-year guidance shows 55% growth over that period, and it's pretty consistent growth. We're in the 9 to 16% annual growth year over year through that 5-year period. And it comes from growth in our existing operating portfolio, and then the back 3 years, really bringing our new Skouries gold copper porphyry project into production really drives us to over 700,000 ounces a year. So exciting time for us.
And the big news with Skouries is that you recently closed on a financing package, and this was many months in the works. Maybe you can just touch on that and what exactly was included in the package.
Yeah, so for Skouries, it's a $845 million US dollar capital project, and we completed a financing package that's 680 million euros, and it comes from 2 large banks in Greece, as well as some COVID relief funding out of the EU. And the way it breaks down, the 2 Greek banks are financing 480 million euro, and each of those banks is managing 100 million euros of funding coming out of the COVID relief funding from the EU. So that total package, again, is about 680 million euros. And that basically covers 80% of the capital required to complete Skouries. The balance, 20%, will come off Eldorado's balance sheet and our operating cash flow during that period.
And maybe you can just tell us what are the next steps for Skouries now that you have the financing locked in?
Well, I mean, maybe a few more details on the financing. It's coming in at a really competitive price. The interest rates it's approximately 5%. So in the current interest rate environment, that's extremely good. And again, we think we have the right stakeholders aligned with us now, Greek banks and the EU. In terms of the capital cost, it's also a fairly unique project compared to others that are under construction at this time. One of the key reasons it's different is that it's roughly half built. All of the major equipment in the flotation circuit, so crushing, grinding, flotation, that equipment's not only purchased, it's already installed. Last year, we put up the building over the mill facility, cranes, cladding. So that was completed as part of our early works. And really the only significant piece of equipment not yet on site are the dry stack filters. So this project's going to deploy dry stack tailings where we'll filter the water out of the tailings and then convey essentially a dry tailings down into a facility. And so those filters were ordered in the second quarter of last year. They came in slightly below our feasibility study cost estimate. And so really we have no risks on equipment deliveries or equipment cost escalation. And so what's remaining is a lot of civil works. We've got diversion ditches to put in, water treatment plant, the tailings facility construction itself, a rock dam that'll sit downstream of the dry stack tailings area to essentially ensure that there's no erosion over the life or into perpetuity. And so, and then beyond that, we've got piping and wiring and things to do within the plant. This is an open pit and underground project, so we have a contractor already breaking ground on the underground component. And during the construction, we will complete 2 large test stopes to validate all of our assumptions on the underground component. Open pit's already been pre-stripped, so we're at the top of the ore body. During the construction, we'll be removing additional waste, pre-stripping for the future, and that rock will be used in constructing that rock dam below the facility. So when you look at the project scope, really no risk on major equipment. About 50% of the cost in that 845 million is Greek labor. We're in a good environment, still pretty high unemployment rates in Greece, so a readily available workforce for both construction and operations. And then the last point I'd make is 80% of the funding is coming out of the financing package we recently completed. And that's a euro-based financing package, but 80% of the capital cost to be spent is also in euros. And so we've got a good match there. In our feasibility study, we assumed the foreign exchange rate of about 1.16 to 1, and currently it's sitting around 1.06. So we've got the tailwind, about 9% on 80% of the capital cost, really no risk on major equipment. And we got a fantastic team from Eldorado and from Bloor on site getting ready to ramp this up into full construction over the next couple of months. So it's a really exciting time for us, and it's a fantastic project.
And in terms of a timeline, when can we expect production?
Yeah, so it's a fairly quick construction given most of the infrastructure for the plant's in place. So we'll start commissioning in mid-2025, and we expect to have commercial production by the end of 2026. And maybe the last thing I just mentioned is just we talked a bit about there's a lot of production growth in our portfolio, but really it's the quality of the production that comes with Skouries that's the big driver. This operation is going to have a negative all-in sustaining cost, and that's because the copper byproducts will pay all the operating and sustaining capital cost, thereby giving gold to be free cash flow from the operation. So it's going to have a massive impact on Eldorado's cost structure and ability to generate free cash flow, which is really the primary driver for valuation. So really, really exciting time for us.
And everybody's looking for copper now.
Yeah, for sure, we're in an environment with electrification of the planet that I think copper's got a strong runway ahead of it. And of course, gold's on a really good tear. So I think we've got the two good commodities in the current environment to drive value for our shareholders.
So that was a great overview of Skouries. Things are moving along there. Now let's move on and discuss Lamaque, which is an underground mine based in Val-d'Or, Quebec. And it was Eldorado's single largest producer in 2022. Can you just provide us with a quick overview of this mine? What was the annual production and what was the all-in sustaining cost? And maybe you can also touch on the growth opportunities.
Sure. So, this was a fantastic acquisition for Eldorado in 2017. It was an advanced exploration project at the time. We put it into operation and production in less than 2 years. And we've grown the production profile. It started out with a peak production of around 130,000 ounces. It's now peaking around 200,000 ounces. As you say, it's an underground operation. We've been mining out of the Triangle underground deposit since startup, and we've got a bright future with Triangle with lots of inferred resources to depth. But we also have exciting exploration potential to bolt onto that. In terms of production, last year we did about 174,000 ounces of gold at $1,036 per ounce and a C1 of about $642 per ounce sold. So, it's a solid operation with good cost. On this property, we made a discovery a couple of years ago that we call Lamaque. And Lamaque is a separate underground deposit. It's a little bit higher grade. It's a flatter lying ore body. We just completed a decline to connect the Triangle underground to our Sigma mill at the end of 2021. About mid last year, we put a drift off of that decline, and we're actively infill drilling the Lamaque deposit. Now, what's important about this, it's already permitted for production. The infill drilling will give us the drill density to convert it from an inferred resource to a reserve. And that drilling should be completed around the end of this year. And then in the first half of next year, we're planning to collect a bulk sample out of this new deposit, which will be the last thing we need to do to convert this to a reserve. So pretty confident this is going to be an increase in reserves next year. It will add additional NPV and value to this operation, and that's really in the near term. Beyond that, we have a large exploration platform and profile on our property package. We're actively drilling a number of underground targets and hoping to have the next discovery, in the next year or so. So it's been a great acquisition and it's got a bright future.
So we've touched on the operation in Greece and we touched on the operation in Quebec. Now let's move on to Turkey. Kisladag is an open pit mine located in the country of Turkey. It had some challenges in 2022. Production was 135,000 ounces, which was below guidance. Maybe you can just touch on what the challenges were in 2022 and if those challenges have been resolved and what the outlook is for the coming year.
Yeah, so Kisladag is, as you say, an open pit heap leach operation that is really going through a second life. So we've just completed an investment in a high pressure grinding roll circuit at the end of 2021, and we're commissioning it into 2022. And we had a few small growing pains at the beginning of 2022, in that we were crushing the ore finer as expected to drive recoveries up. But we also figured out pretty quickly that we needed to agglomerate the ore. And to do this, we're adding cement to the crushed ore. What this does is cause the fines to bind together to ensure that we can get good permeability or flow of solutions through that crushed material to extract the gold. And so last year, we were learning how to run that circuit with cement addition. The cement makes the ore sticky. It was plugging chutes, and so it took a while for us to learn how to operate it. At the same time, we're investing in essentially capital for the next 15 years of mine life at Kisladag. And so we've put in larger conveyors. That's helped with the cement addition. And so we were able to drive the tonnage up by the end of last year, came slightly underneath guidance for the site. But really, we set this up for an exciting future going forward. And that we've now got the North Leach Pad going into production in the second half of this year. That will sustain us over the remaining 15-year mine life. The HPGR, it has lots of upside potential in terms of both throughput and ability to crush the ore finer. Finer ore means we expose more gold. That means we could get better recovery. And the last piece of the puzzle, around the middle of last year, from the learnings we had in starting up this new circuit, we purchased an agglomeration drum. And essentially, this drum is just being installed, and we'll take the fine ore that comes out of the HPGR crushing circuit. We'll add the cement there rather than on the conveyors. And in that drum, we'll do a better job of agglomerating the ore, essentially making balls out of the fines. The cement will help stick that together, and then we combine that with the coarser material and then place it up on the pad and then extract the gold through heap leaching. So really our focus going forward at Kisladag is how can we debottleneck this plant to get higher throughput? How could we crush the ore finer with the addition of this agglomeration drum? And ultimately, what does that mean in terms of tons placed and gold recovery going forward? So, we believe we've got significant upside. This year, we'll be testing the new circuit. And by the end of the year, we should be in a pretty good position to understand that upside and to bake it into our 5-year guidance a year from now. So, really exciting time for us on a key asset for the company. And I think it's got a bright and improving future.
George, I want to move on now and discuss your exploration program. It's a big part of the growth strategy over the next 5 years. We already touched on what's happening at Ormaque. Maybe you can just talk about your overall exploration budget for the coming year and where you and your team will be focusing your resources.
Yeah, so we got a pretty large exploration budget this year. It's between 35 and 41 million US dollars. About 57% of that's expensed and the rest is capitalized. And the breakdown on that exploration, 60% of it's in Canada at our Lamaque operation. We've got about 119,000 meters planned for drilling, and 45,000 of that's resource conversion drilling on Ormaque. That's the deposit we're looking to convert to a reserve. And hopefully with our exploration, we'll have the next discovery on this property package and bolt that on to what we expect to be a reserve increase next year, bringing our Ormaque into the reserve picture. And then switching over to Turkey, about 30% of that budget is in Turkey. Here we're focused on FM Çukur, where we have the West Veins in terms of exploration targets to create new inferred resources. And then we're also doing about 10,000 meters of resource conversion drilling at FM Çukur basically to be able to extend mine life by reserve conversion. And we do have some greenfield projects. Eldorado successfully discovered both Kisladag and FM Chukru and brought those discoveries into operations. We do have a number of greenfield projects that we're currently actively drilling on, and we're hopeful to have our third mine in that jurisdiction. And then about 10% of the exploration spend is in Greece, and it's really brownfield targeting around Olympias and Skouries. So yeah, big year from the exploration perspective, and hopefully an exciting year in terms of new discovery and reserve conversion.
George, I want to move on now and discuss valuation. In addition to a very strong gold price, Eldorado Gold has so much going for it. We already discussed the completion of the financing package at Skouries and also the exploration upside, but Eldorado is still trading at a discount to many of its comps. What will you and your team do in the coming months to resolve this?
Yeah, I mean, really the opportunity to change the valuation of Eldorado is really a key opportunity for us. Our P to NAV, we're trading on the bottom side of our peer group. And the key reason for that is that Skouries is a high quality project, but the market currently isn't giving us credit for that high quality asset. And so by delivering the financing package recently, we're in a good position. We have the funds required to complete construction. We have a high quality team at site ramping up the construction, and we'll have this operation in commercial production by the end of 2025. So as you see from our production profile, we'll be increasing our production and driving our unit costs down over that 5-year period. And we believe with delivery of our growth, the market will revalue Eldorado. And I really firmly believe we're going to be on the top side of that P/NAV equation. And that's simply because the quality of our assets, Skouries with that negative all-in sustaining cost, is going to bring down our consolidated average cost per ounce. And that's going to drive our margins up. We're going to be generating significant free cash flow. And that's going to dramatically reposition Eldorado from a P/NAV perspective. And I think this is the number one opportunity for shareholders is to be involved with Eldorado as we drive and deliver on this tremendous high quality growth.
George, as we wrap up, you've already provided a lot of detail about your various operations, but maybe you can just summarize for investors what they can expect in terms of news flow in the coming months.
Yeah, so I mean, starting with Turkey, I'd say with Kisladag getting our agglomeration drum up and running, having a good year on production and cost, and uncovering the opportunities to further create value on Kisladag, that'll be an evolving story over the next year. And then at FM Chukru, it's really the focus on conversion of inferred resources to reserves and then extending mine life. As we switched over to Canada, similar story in terms of the infill drilling on our Lamaque, the ability to convert that to a reserve and extend mine life, and that'll happen in the first half of 2024. In Greece, it's really continued transformation on Olympias. We're expecting to be able to drive up production, drive down cost. And then while we're doing that, we're going to be executing on the Skouries construction project, and be, good opportunities for us every quarter to update the market on how that construction's going and ultimately delivering the high quality value from that asset.
Well, George, that was a great update. I want to thank you for spending time with us today, and congratulations to you and your team on completing the financing package at Skouries. Once again, thank you.
Yeah, thank you. Have a good day.